Hi everyone. Okay, so a lot of people have been saying that harmonized project is actually better because you are paying for the space that you use instead of things like aircon ledge. So Matthew, what do you think?
I think it's a fair and good policy. Now consumers are paying for what they are going to use. But today, there's something deeper. If we can actually use harmonization, right, to determine whether the upcoming development have a built-in profit. So let's dive in today. So today, we're going to use this case study as an example. I'm going to use Grand Diamond and Emerald Cartons. During the pre-launch, right, we will not know what is the exact price going to be for the launches. So what we're going to do, we use the nearby project. So for the 3-bedroom flexi for Grand Diamond, right, the cheapest unit is about 2.8 million, right? It's ranging about 2005 to 2006 per square foot. So what is the key difference in terms of the layout? For the 3-bedroom flexi for the Emerald Carton, actually from what we see, actually not so much difference. Why? Because the bedroom 9 square meter, same. Balcony 6, same. Slightly smaller master bedroom, which is about like 1 square meter. I think for the kitchen and yard, also same, about 10. Key difference will be this long foyer and a smaller living room. And of course, the 6 square meter of aircon ledge. So how can we use it to determine the launch price? So today, we just use 990, right, 2005 to 2006. So technically, Emerald of Carton 3-bedroom flexi will go out to about 2.6 million, which is about 300k difference. So today, the question to you, you need to ask yourself, for this foyer 8 square meter and a slightly 1 square meter master room, right, should I pay 300k more? So during the launch, did the price happen? Actually, yes. So you see, for the 990, it's about 2.4 million for level 3 unit. Technically, for level 3 unit at Grand Diamond, right, it's about 2.7 million. So today, for people who enter at Emerald Carton at 2.4 million, right, for the person who buy, can I say that he has a potential of a built-in profit for about 300k? But is it always the case?
Okay, so is harmonized always better? Of course, if we look at the previous example, harmonized is better lah. But if we look at the 2-bedroom layout, right, for example, Tembusu Grand and Emerald Carton, right, actually the difference is not much. It's only about 43 square meter, which actually, if you look at the floor plan, might be a lot of due to the aircon ledge. Okay, so from this, imagine you're a buyer, are you able to determine which is a better deal just based on this floor plan alone? I would say it's quite difficult. So we actually look at the price. Tembusu Grand, of course, it is 32k cheaper than Emerald Carton. So in terms of the PSF, Tembusu Grand is going at 2003. Okay, but for Emerald Carton, the PSF has already hit 2005. So what's the key difference? Today, imagine you're the buyer that actually bought Tembusu Grand. In the future, can you actually try and sell at what has been done at Emerald Carton, which is 2005? So can I say that will actually be a built-in profit potential? And also because of the size is slightly bigger, if you actually multiply the difference in profit, right, can I say maybe the profit will be slightly more? But of course, this is what has happened in the past. Tembusu Grand and Emerald Carton has all been launched. So what is going to happen in the future?
So like what Dillon has said, right, Emerald Carton is already almost fully sold. So just now we use harmonization to estimate the price for EOK, right? So today, how can we estimate the price for 4 plot of Zion? So imagine today, right, the developer actually built the same layout for the new launches, right? So it's about 624 square feet. For Irwell Hill residents, right, with just TOP, right, their 2-bedroom is already transacted at 2.05 million, which translates to about 3,000 per square foot. So using the same per square foot, right, if the 4 plot of land actually sell at 3,000 per square foot, right, it's about 1.8 million, which translates to a difference of about 150 to 170k. So imagine today you are a buyer, they're going to buy the launches in Zion, the 4 plot of land, right, about 1.8 million, right? Is there a possibility there's already a built-in profit of 150 to 170,000? So is this an opportunity or is this a good deal if it's really happened? So just now I share a bit about there will be a healthy competition between developers. So how does this oversupply in terms of new launches benefit buyers today?
So if we look at the situation that we saw earlier that Matthew discussed, right, actually this already happened in the Lentor area. So if you look at Lentor area, actually during that time, the developer that entered in this area are also having the same concerns that there will be an oversupply because there's many land and many new launches that will be coming up. So what happens when the developer actually feels some stress? Okay, if you look at that time, Amor Residences actually hit a high of 2003 PSF, but Lentor Modern, which launched after Amor Residences, they only launched at 2008. So why are they giving this kind of prices? Imagine you're the developer and you're entering into this land, you're the first one to go. Will you actually price your development in a way that is actually safer to actually capture as much market share as possible? And in that case, because they want to capture more market share because they are the first to go in, they actually sell about 400 plus PSF lower. So eventually, of course, when Lentor Modern units start to move, developers also get a bit more confident. They start to increase the price to about 2003. But Lentor Hills, which launched after Lentor Modern, actually their price went back to the same price as what Lentor Modern launched at 2008. Again, why do they launch at this kind of price? Because whenever a developer launches their project, they want to sell as much units as they can. And in fact, like we mentioned earlier, because there's many plot of land coming up, the developer also feel a certain stress, which means, for example, in this case, they actually sell up to 500 PSF lower than Lentor Modern. But the key question to all the viewers out there, is that will the developer feel stressed forever? So if you see, for example, Lentor Modern, Lentor Hills, Gulot Green, actually the PSF is about 1,008 to 1,009. Eventually, after 6 months to 1 year, the price actually went up to about 2,000 plus. So from this, we see why developers actually behave in this way. Because, like I said, due to the oversupply, developer also feel some fear. So they will try to launch at a good price because they are worried if they don't launch at a good price, the buyers will have this thinking, hey, they're actually going to be upcoming plot of land. Should we wait and see? So that is why you get a good price when there is actually a oversupply, and which you can actually take advantage of this opportunity. So oversupply, of course, is one factor, but why is there opportunity in CCR today?
Because during March, Singhai actually beat the land in Bayshore for 1,388 per square foot per plot ratio. And the news article says that they are going to launch of averagely 2,700 to 2,008. And one key thing you need to take note is this 1,388. 1,388 OCR. And the 4 plot in Zion, actually cost cheaper than 138. There might be a possibility that the 4 launches, may be same price as OCR. So today, technically, we know, prices near the core central area will be more expensive than the outside core. Imagine you are a buyer today. You are able to buy something at River Valley, same price as Bayshore. Is it safer?
So with all the data analysis, can I say the next step is to actually take action. So if you're actually shortlisting units that might have built-in potential, or if you're eyeing a unit but you're not sure whether it's a safe buy, feel free to DM or comment below. I'm Dillon.
And I'm Matthew. We'll see you soon.